Fed sends stocks lower, oil corrects after a strong rally. U.S. stocks rose on Tuesday on the back of broad market gains and mostly upbeat economic data. The Empire State Manufacturing Index came in at 17 for September, rebounding from 3.7 in August, despite economists expecting the index to come in at 7. Tech stocks pushed Wall Street higher, led by Apple shares ahead of a launch event by the company. Apple Inc.'s 1.8% rise was the biggest boost to the S&P 500 and NASDAQ. Tesla shares popped 7.2%, Microsoft jumped 1.6%, Amazon and Alphabet each rose 1.7%. The S&P 500 gained 0.5%, the NASDAQ Composite advanced 1.2%, and the Dow Jones Industrial Average closed just above the flat line at 27,995.60. Asian equities were mixed on Wednesday as investors awaited news from the U.S. Federal Reserve. On the trade front, a World Trade Organization panel found that Trump administration's tariffs against $200 billion of Chinese goods are illegal. However, the organization has little recourse to take against the U.S. In Japan, Prime Minister Shinzo Abe and his cabinet officially resigned Wednesday, clearing the way for Yoshihide Suga to be confirmed as the country's next prime minister. Meanwhile, new data showed Japan's exports plunging 14.8% in August, but that was still better than the previous month, beating analysts' expectations. Japan's Nikkei 225 was nearly unchanged on Wednesday, as was Hong Kong's Hang Seng Index, while Australia's S&P ASX 200 rose 1%. European stocks closed higher on Wednesday as investors awaited the outcome of the U.S. Federal Reserve's two-day meeting. The Pan-European stock 600 ended up 0.4%. In regional news, European Commission President Ursula von der Leyen vowed to build a new transatlantic agenda with the U.S. regardless of November's election result. Also, she warned that the chances of the bloc securing a trade deal with the UK were fading by the day. The FTSE 100 fell 0.4%, driven lower by a stronger pound. As for key economic data, U.S. retail sales rose for the third month in August, although slowed from the previous month. Retail sales were up 0.6%, following July's increase of 0.9%, revised from 1.2%, while economists had expected a 1% increase. Core retail sales fell 0.1% last month after a downwardly revised 0.9% increase in July. During the meeting, members of the Federal Open Market Committee indicated that the U.S. overnight rate could stay anchored to the zero bound through 2023 as the central bank tries to spur inflation. Fed Chair Jerome Powell said officials did not expect to change course until the recovery was very far along and warned the rebound could be at risk without more government spending. Projections showed bank leaders expect the U.S. economy to shrink by 3.5% this year, less than the 6.5% decline feared in June. However, Powell warned that the recovery could falter unless politicians approve additional aid. Despite a fairly dovish tone from the central bank, U.S. stocks were mostly lower on Wednesday. The S&P 500 and NASDAQ both closed in the red, and the Dow ended well off its session high as sliding tech giants overshadowed the Federal Reserve's pledge to keep monetary support intact for the foreseeable future. Mega caps including Apple and Facebook were leading the slump after a two-day recovery. Meanwhile, energy stocks gained the most throughout the day due to a strong rally in oil prices. As for currencies, the dollar gained across the board after the federal meeting outcome, sending the euro to its lowest level since mid-August. The euro-US dollar is challenging the 50-day SMA support for the first time in 5 months. The pair extended losses to the 1.1740 area and bounced partially in recent trading, staying below 1.18. Oil prices rallied aggressively on Wednesday, climbing to 10-day highs around $42.40 as Hurricane Sally continued to wreak havoc in the Gulf of Mexico, where more than 27% of all offshore oil and gas production remained shut as of Wednesday. Also on the positive side, the EIA's report showed a 4.4 million barrel crude inventory draw for the last week. Total oil production, however, climbed by 900,000 barrels to 10.9 million barrels per day last week. On Thursday, Brent crude retreated under the $42 handle amid lower stocks and rising dollar. Asian stocks were broadly lower Thursday despite the U.S. Federal Reserve indicating its benchmark interest rate will stay close to the zero at least through 2023. The Shanghai Composite Index lost 0.26%, and the Nikkei 225 in Tokyo sank nearly 0.7%. The Hang Seng in Hong Kong retreated 1.4%, while Sydney's S&P ASX 200 declined 1.1%. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.